You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.CFRN.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.CFRN.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 17th day of September, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, not to worry, point any internet connected browser to CFRN.net/live. There you'll find a live real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live during this broadcast on Facebook, YouTube, and Twitter. And CFRN Radio has been streaming the gospel to the four corners of the universe around the clock since April 2005. Let's open today with a word of prayer. Heavenly Father, we thank you that you are the source of all true joy in life. Help us, God, to find our joy in you. Help us to hear your voice so clearly above all the others as we gather together today during this time that you have given us, that you have appointed. Lord, we pray that your peace would be in our hearts, your grace would be in our words, your love would be in our hands, and your joy in our souls. May your love surround us. May your spirit guide us, your voice cheer us, your peace calm us, your shield protect us, your wisdom arm us wherever you lead us. And it's in Jesus' name we pray. And Lord, we pray especially for those who are in the path of these fires. Look at a map, it almost seems as if the country's on fire. But Lord, we know that you're in control. And we just pray for the safety and the health and the well-being of all those whose lives and homes are at this moment threatened. In Jesus' name we pray. Amen. All right, it is Happy Thursday. Let me give you the numbers from around the world. These are the cash markets, the indices as they're called. Starting here at home, the Dow down 142 points, NASDAQ down 189, S&P 500 down 35, and the Russell 2000 down 10. Now for the NASDAQ, that's a drop of 1 3/4%, and for the S&P, it's a drop of a little over 1%. In the commodity basket, crude oil is up 73 cents, trading 40.89 last, gain of almost 2%. Gold down $19.40, trading 19.5110 last, drop of almost 1%. And silver down 3 cents, trading 27.10 last. In the Asian markets at the close, Nikkei posted a loss of 156 points. Shanghai dropped 13. Hang Seng fell 384, and that is a drop of 1.5%. In the European markets at the close, FTSE down 28, DAX down 47, CAC down 34. Again, some pretty quiet trade continues in the European markets and the Asian markets too, to a degree. So that gives us a red day in Asia, a red day in the UK, and so far a big red radio Thursday here in the US of A. Let's go to Michael and get a recap of what happened this morning in the live training room. Michael, if you're ready, you can take it away. And if you're not quite ready, I'll drag this up to the big screen. Here's where we're at for the week. This is week 111 of Logic 247. Now, we have two alert services, Logic and Concierge. Concierge is the granddaddy, been around about 7 years. Logic, obviously, 111 weeks. The difference between the two, the Concierge numbers come out as a static report at the beginning of each Globex session. And I shoot for around 6:30-ish. Okay. Those numbers, though, are good for the entire session. You'll often see those alerts trigger multiple times throughout the trading session. The logic alerts, those are different. They don't come as a static report, they come as individual alerts around the clock when opportunity presents itself. The logic channel opens for business Sunday night at 6 p.m. Eastern. That's when the alerts start to flow, and that channel stays open right up until Friday afternoon at 5 p.m. Eastern. Okay. Now the markets do take a break for 1 hour each day, 5 p.m. Eastern to 6 p.m. Eastern. Just like today, obviously this is the Thursday session. The market will close this afternoon at 5 p.m. Eastern. The market will reopen at 6 p.m. Eastern, and even though it's technically still Thursday on the calendar, that's the beginning of the Friday session. Okay? Now, so far this week, week 111, we've issued 44 total alerts. 10 of them just never triggered. Still waiting on the results of one. That's given us 33 actionable alerts so far this week. 3 of those have been stopped out. That's 9% of actionable alerts stopped out based on not risking more than $300 per contract per trade, less when possible, based upon our 3-step methodology that I teach all of our traders based on market structure. So again, 33 actionable alerts, 3 stopped out. That's 9%. What we've averaged over the last 110 weeks is 20%. If I scroll up here, here's the full recap for the entire week last week. Total of 66 alerts, 15 never triggered, 51 were actionable, they actually triggered, 9 were stopped out, so 18% of actionable alerts were stopped out last week and so far this week, with the remainder of today yet to go, and then the Globex session tonight and all of tomorrow. These are the numbers as of right now. And Michael, sounds like I hear you there, so if you're ready, you can go ahead and take it away.
Okay. Okay. Thank you. All right. Do that. Here we go.
So you're not feeling good?
No.
What's going
No.
on?
Well, let me go back and look at the symptoms.
Oh, no, I mean, I was just, someone in the chat box just mentioned to me that you said this morning you weren't feeling well.
No, I was not. I'm still not. My fever was going up during the whole morning session. And last night it fluctuated by 5 degrees. Whatever it is, 5 degrees. And it was just weird.
So, you been to the doctor yet?
Not yet. Not yet.
Are you going to go today or?
My doctor is all the way in Asheville.
Oh.
So I gotta have time to do that, and I don't know if I'm gonna have time today.
Take care of yourself.
I'm trying. I'm
All right,
trying.
buddy. All right, well,
Here we go.
I'll go ahead and hit mute on my end so you can get your part done and go rest.
Okay. Here we go. All right. Good afternoon, everyone. Today is Thursday, the 17th day of September 2020. If you can read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today, we made 12 ticks in the euro, 8 ticks on gold, and 11 ticks on crude oil. We made 11 ticks on the ES as well. That put us at plus 402.50 on the morning session. And today took 15 minutes and 4 trades to get to $110 a contract, and we took a total of 13 trades. So that put us at plus what, 402.50 on the morning session. On the month now, we're at $7,627. That's over 12 trading days, averaging $635 per contract per trading day. And I am now at my 148th consecutive day of getting my goal. On the year now, we're at $71,083. That's over 173 trading days, averaging $410 per contract per trading day. Okay. If you are not part of the CFRN family and you want to be part of the CFRN family, go to EminiFuturesTrading.com. EminiFuturesTrading.com, and just follow the instructions. It's all there for you. If you have any questions, you can email support@cfrn.net. Okay. Now, let's get into what we did and didn't do. We had a bunch of trades in gold today. It seemed like, anyway. And today in the room, I was actually taking YBR trades. I'm not counting them toward the room, but I might start keeping track of the total amount each day. Oops, that went too far. But so wow, that was a big move in gold right before the open. All right, so our first trade that we missed was right here, right at 938. I missed that one, missed that one. Either one of those would have gotten the goal. Then I got that one, and we picked up 5 ticks on that one. Got this one, picked up 2 ticks on that. This was a YBR long. That worked out well. We got this one. We picked up 8 ticks on that. No, I'm sorry. We picked up 4 ticks on that. Sorry, I forgot I had to scribble something out because I put it in the wrong place. Looking at all the trade setups that did happen and that could have happened. And there was a short right here that would have worked out. And over here, there was a long right there. And over here, another long. And over here, a short that I didn't account for. And a break even that I didn't account for. Oh, maybe those both break even. That's probably what it was. Then let's see. There was a long there and a short there. And a nice wide long right here. Capture that thing. That was a break even. A short that we missed. A break even and another break even. And another break even. It seemed like I was getting a lot of break evens on gold today. And that was it for the morning session. I think my number's off in the total number of trades too. But this morning I was taking some of the YBR trades and showing everybody my DOM when I was doing it. And I may start keeping track of that and put another column or another spot in the spreadsheet where you'll be able to see, just what they're worth. Okay. In the euro, our first trade in the euro was right there. We picked up 12 ticks on that, and that was the only trade we took in the euro today. There was a nice YBR short right here that I took, and I got like 16 ticks on. And that was it. That was about it for the euro. So we're plus 12 on the euro. Over here on crude, we had a break-even trade there and a +8 trade back here. We picked up 8 ticks there. We missed that one right there. I'm just looking for YBR trades. Come on. Oh, well, now we're in the pre-market. Okay. So crude did have a lot of movement today, but if you look down here at the slingshot, I circled most of the trades that I recognized, but there's a YBR short. There's a YBR short. That one was during the break. Here was a short right here, right at the break that I missed. That would have worked out just fine. But let's go now to the ES. And the ES had a lot of movement today. A lot of movement. Well, maybe we can I can keep track of that, I think. Okay. Yeah. Let's go back to the beginning here. We'll start from the beginning with the ES. Okay, so our first trade of the day was right here with the ES. We had a break even. Our next one was right here. We picked up 4 ticks. It was a YBR short right here. Turned around and gave a long trade right here that I missed. Let's see. I'm just looking for the YBR trades along with the other trades all at the same time. Right here was a long. Right here was questionable because the cycle's starting to go down kind of steep, but it worked out if you did it. And over here was a YBR short, another YBR short. This one here, you see the cycle's going down too steep to go long on the YBR right there. We had a regular trendline trade right here that would have been break even though. And here we picked up 8 more ticks to put us at 7 more ticks to put us at plus 11. And then we had a break even trade. And there's a YBR long here, short here, short here, didn't really go anywhere. Long here, that would have worked out just fine. Short here, long here. Okay, I'll think about it, Ray. I'll think about it. Short there for the YBR. I mean, there and there were shorting opportunities. It probably would have just been one trade. You would have pulled back and gone down this way. Let's see. Regular trade setups. You know, the slingshot is just all messed up down here right now. So we really didn't get many of them. Then we get into the break and I'm just cruising through this to see the big moves. And we really didn't get all that many trade setups during the break. There was one here. I mean, here. But that was the morning session. Okay. Where is it? Here it is. If you can read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 17th day of September 2020. Today, we made 12 ticks in the euro, 8 ticks in gold, 11 ticks in crude. So that's backwards. 8 ticks in crude, 11 ticks in gold, and 11 ticks on the ES to put us at plus forward 250 on the morning session. And took 15 minutes and 4 trades to get to the goal for the day. At that point, we were plus 110, and we took a total of 13 trades. On the month now, we're at 76.27. That's over 12 days, averaging $635 per contract per trading day. And today is my 148th consecutive day of getting the goal. On the year now, we're at 71,083. That's over 173 days, averaging $410 per contract per trading day. Okay. All right. So if you're not part of the CFRN family and you want to be, go to eminifuturestrading.com. Just follow the instructions there. Okay, that's all you have to do. Okay. Now, with that, I can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain. Dwayne, if you are ready.
I am ready.
Great.
I am ready. Okay. Recap of the recap.
15 minutes, 4 trades, $110 a contract.
Good job.
Thank you. Thank you.
Sorry again to hear that you're not feeling well.
Yeah, I know. I never get sick. but when I do.
Yeah. Well, you got a whole army of folks here praying for you, so
Thank you all.
You'll be in good hands.
Yes.
So what Michael just went over with you guys, that is what happens every morning in the live training room. This is where for 2 hours, from 9:30 a.m. Eastern to 11:30 a.m. Eastern, Michael trades 4 or 5 different markets, all at the same time, using the exact same methodology, the exact same strategy, the exact same indicators. We haven't changed the line of code, those indicators, or any of the rules to our very simple strategy in quite a long time, years, about 8 years I guess it's been, or 8 years or more. So for 2 hours a day we teach you the strategy, but that's just part of what we do. The other part of what we do, okay, now Michael mentioned this page to you, Emini Futures Trading.com. Not only do we teach you our strategy, teach you our trade setups, we also provide you with trades while you're learning. Now, some people ask, well, what exactly do I get with this passport? I think everybody knows a lifetime passport's $5,000, but with the economy where it is today, money's tight everywhere. So in an effort to do our best to try to help those who do want to learn how to trade, but as I just said, the economy's pretty tight, we've done something we've not done in the past. Of course, it's been requested. It's probably the single most requested thing ever. But all things considered, we thought it would be the right thing to do. So right now, you can start trading Emini Futures today with us for just $97 a week. Now, at some point, you're going to realize, hey, I don't want to pay these guys $97 a week for the rest of my life. You're going to upgrade. You're going to just go ahead and buy a lifetime passport. And you can do that whenever you're ready. Up until that point, it's $97 a week. So what do you get for the $97 a week? Well, as I said, Michael trains you 2 hours a day, not to trade a specific market. He teaches you how to trade based on our strategy. So if you like to trade the S&P, you're covered. The Dow, the Russell, NQ, crude, gold, euro, soybeans. If it's a futures market, if it's an auction style market, where you've got buyers on the bid and sellers on the ask and price channeling back and forth, our strategy, out of the box, traded purely mechanical. Okay? It's exactly what Michael teaches you every morning for 2 hours. Some people like 5-minute charts, some like 30-minute, some like hourly, some much larger daily, some much smaller tick. We actually use a range chart to train in the morning for a whole list of reasons. And if you don't know the reasons, you can ask Michael in the morning in the live training room, and he'll go through some of the reasons why we found that to be, for us, the best time frame to use to teach you the strategy. If we were using a bigger time frame, you might only see 1 or maybe 2 trade setups and triggers per session. But by using that faster range chart, you're able to see, well, you just heard it. Michael did the recap. He went through all the opportunities that were available this morning using the range chart. Now, you learn on the range chart, and you can stay with the range chart. What you learn in that room, you don't ever have to change a thing. You don't ever have to add a thing, okay? Of course, there are those who want to explore, and wherever you are on the planet, from Sydney to New York to London to Tokyo, back to Sydney again, our method, Globex, pre-market, you name it, the markets are open. It's Sunday night at 6 p.m. Eastern. We're open for business. Okay, so wherever you are, whenever you're ready, if the markets are open, we're ready too. On this page, you'll find some videos of some of the different setups that we saw last week. I did a couple of daily recaps here. this just in case you've never been on this page. Most new traders spend all of their time and money, time and treasure, trying to figure out a way not to get stopped out. Unfortunately, you are going to get stopped out. Every professional trader knows this. Every profitable trader knows this. So they don't burn up time or treasure trying to do what simply can't be done. And there's some little part of our brain that wants to tell us that, yeah, it can be done. There's something somewhere. Somebody's come up with some line of code. They found some ancient secret scribbled on papyrus in a clay jar in an urn in the Gobi Desert, right? And then they made an infomercial, right? Well, unfortunately, that's just not true. That's not the truth about trading. The truth about trading is you're going to get stopped out. The sooner you learn to deal with that, the better. That's why when you first get started with us, you get a 24/20 blueprint, and it guides you through writing your business plan and your trading plan, which are two very different documents. And what you're building into that plan is the fact that you are going to get stopped out. See, we've already made allowance for that because, well, that's the truth about trading. This little video covers what happened the last 110 weeks. And then down here is just sort of a list of everything that we offer. The Logic 247 alerts, the Concierge Trade Alerts, the weekly trading zones. Well, you'll check out the page. You'll scroll through it. You'll see. It's all wrapped up in a nice little basket with a bow on top, and you can get started today for $97 a week. Now, along with providing you the strategy that we use, teaching it to you from the ground up, bit by bit, and it really is so simple. Everybody, first thing's like, well, where's your MACD? Well, we don't use one. Well, where's your stochastics? Yeah, we don't use those. Well, where's your Kellner channels? Yeah, by golly, we don't use those. And I'm not knocking any of those things. All of those things, I'm very sure, work just fine and do exactly what they were created to do. Our strategy just doesn't require any of the things that those things were required to do, because our strategy is designed to take the most basic, most simplistic look possible at the market. Nobody knows what's going to happen next. We're the first to admit that. But it is possible, once you understand how markets work, once you understand the underlying principle, it is possible to know with a high degree of probability what the next high probability move is going to be. As I just showed you a second ago, this is the week 111, the week we're in right now, the recap so far. 44 alerts, 33 of them actually triggered, and 9% stopped out. Average week is 20%. Okay, well, that sounds good, but what does that really mean? Well, let me show you that too. Remember, we open up for business Sunday night, 6 p.m. Eastern. Most of the world doesn't even know there's trading available on a Sunday evening, because we were all brought up in that Wall Street, 9:30 to 4 world. Futures kind of sets you free. You're not chained to a time clock. You are free to move about the world, really, as long as you have a robust, reliable internet connection. You can work, you can trade from any place you want. But I got to say that internet connection, that's your lifeline to the markets, and it's got to be reliable. Now, this week, last week, 110, we already covered that. 18% were stopped out of 51. But just this past Sunday night, the very first alert we sent out was for the S&P to buy 33.45 with an initial target at 33.47 And then the final trade to target is the weekly trading zone above at 33.49/50. So when this alert came out, had you gone to your computer, had you bought one contract of the S&P 500 E-mini at 33.45 and taken your profit at the target, the final target, 33.49, that would be 4 S&P points at $50 per point. That's $200 per contract traded. Now, I think I said earlier that for a limited time, you can become a full-fledged, bona fide CFRN passport holder for $97 a week. The first alert out of the gate Sunday night, paid for 2 weeks. Tell me more. Well, the next one, which was a gap fill because we had a gap higher open Sunday night, and on the index futures, gaps typically fill pretty quickly, almost always within the same session. But here these last couple of weeks, we've had a few that have taken a little longer. So after a certain amount of time elapses, we put the Z's in here. That just means it never triggered, and we're moving on to greener pastures. That gap, if it hasn't filled, will fill. They always do. Just sometimes takes a little longer than others. Here's a long on the Dow, and then here's the string of gap fill on the indices, the ones that the gap fill never filled, never triggered. Here's the NQ to be long, 1160. Swing high when we measured it, when we did the recap, was 111.80. That's 20 points at $20 a point. That's $400 per contract traded. So the first trade coming out of the gate, right? 200 per contract. And this one went from 680. It hit from 680 to 27,892. Trying to read this. This was to be long 680 up to 700, up to 760, up to 900. Okay. All right. So let me do the math. I'll even use my calculator to get it right. 892. Minus 27,680. 892 minus 680. It's 212 points. The Dow pays $5 a point. S&P is 50 a point. There's 4 ticks to a point with the S&P. Dow pays $5 a point. So a 212 point move at $5 a point, that's $1,060. I guess that just paid for 10 weeks of the passport. But again, you'll catch on pretty quickly that the way you really want to go is you want to grab the lifetime passport while it's available, because once you have that, you don't ever have to spend another dime with us. It covers everything we've ever done, everything we're doing, even the stuff we may do someday. Okay, whatever that might be. All right. I could scroll through here, but you have access to this information, so you can scroll through it yourself as well as I can. Just know that the Z's means never triggered. Thumbs up means got to the target. Here we were looking to be long the NQ at 281. The initial target was 291. The final target was 11,313. It made it to 11,311 and a half. So if we take that one and we take the entry, or 11, so 311 minus 281. That's 30 NQ points at $20 a point at $600 per contract traded. So I think you can see how this makes it pretty affordable for you to learn how to trade, right? Michael's teaching you how to find these setups 2 hours a day. He and I both are teaching you every day in the one-on-one mentoring sessions in the afternoon. By the way, I don't know if I mentioned, but as a passport holder, you have access to unlimited one-on-one mentoring. For me, you just go on the website, you just book the session. Michael, you just send him an email, tech@cfrn.net. We try to make everything as simple as possible. You go on my page and you'll just see what days, times I've got available. You find a day and a time that's convenient for you, you book it, and then we meet in a go-to meeting environment, much like go-to webinars, just sort of a smaller scale, designed for smaller groups. And you and I are the only one there, and instead of you having to type in questions, we just open up your mic and then we can have a conversation just like we're having a telephone call while we're looking at the charts, while you're asking questions, while we're going over the trades that you took. Now again, you have unlimited access once you become a passport holder. Here's a long on the Dow. The Dow, we were looking to get long at, this one's up about 20 points. That was only $100 per contract traded. Now here's the stop out, okay? Red X means that got stopped out. All of these alerts are based on not risking more than $300 per contract per trade, less when possible, based on the 3-step methodology that I teach you, based on market structure, okay? So now remember, we're still on Sunday night. We haven't rolled over into Monday yet, or have we? Yeah, we're into Monday now, okay? So here's a long on crude. Ran up to 37.70. Hit the first target, hit the second target. Didn't quite get to the third target. But from 50 to 70, that's $200 per contract traded. There's gold. This one ran up, from 68 to 79. That's 11. Let me say it again. It's $1,100 per contract traded. Think about that. This is what you get with us. Oh, well, maybe you just had a good week. No. We've had a lot of good weeks. God has been very gracious. Because our methodology is based upon the underlying principle upon which the market operates, we're not doing anything fancy. We're just doing what the market does. And we teach you how to read the chart and how to read the indicators so that you can do the same thing. Do what the market does. The market's always right. Now, you won't always follow the market with perfection. Stop out. Okay. However, over the past 111 weeks so far, we've averaged 20% of these alerts getting stopped out. Okay. 20%. That's the average. For silver, stop out on the S&P. This was a long on S&P, and then here's a long on the S&P, and this is gold, silver, Russell, NQ, S&P. Then we had a couple of no triggers. These price just didn't touch the trigger. Here's the Dow, 185 to 251. It's about $300 per contract traded. Here's crude, ran up from 40.05 to 40.22, so $150 per contract traded. This went from 62 to 69, that's 7 points. That's what the market made available at $50 a point. That's $350 per contract traded. Now, again, this information is available to you. So you can scroll through here and take a up close look at these. The last alert that we've issued, number 5,222, over 111 weeks, we've issued 5,222 individual Logic 247 alerts, and we've averaged 20% of those being stopped out based on not risking more than $300 per contract per trade. Now, those are the logic alerts. Those are the ones that are based on current price action. In other words, whatever's happening right now, it doesn't mean you've got to, run to your computer, because the alerts are based on a 30-minute chart. You typically have at least a half an hour, and probably on almost every occasion. Again, because it's a 30-minute chart, so for that thing to get up there and trigger, it's going to take a while, unless all of a sudden we have a really fast move in the market. And it may not trigger in a half hour. It could be an hour, it could be an hour and a half. Okay, so you have plenty of time to get yourself prepared and ready for the trade. And you never know when the computer is going to make that sound, or your phone or the tablet, dee-dee-dee, which tells you there's a fresh alert in the channel. Never trade an alert just because it's an alert. Okay, that's important. Always look at the chart first, because the longer, the more time that has passed from when the alert was issued to the time that it triggers, market structure can change, and I'll show you that on the chart here in just a minute. So the alert goes off. Don't just put on a trade. Go look at your chart. And if things look the way they're supposed to look, then you put on the trade. Now this next part is really important. Okay, you get started, you get your passport, man, you got all these trades just pouring in. You got guys teaching you how to understand the market, the underlying principle, how the markets work, the truth about trading. You got it all. Now what you have to do is resist the temptation to start trading real money before you should. Well, let's face it, we all just want to start clicking the mouse, making some money. I mean, hey, that's why we're here, right? Well, yes. But before you start clicking the mouse and making money, you've got to learn the methodology. You've got to learn the strategy. You've got to get a handle on how this all comes together. Michael's teaching you how to trade these alerts, how to find these alerts, how to find these high probability opportunities. And at the same time, I'm sliding another one in front of you. Here you go. Here comes another one. Here you go. Here's another one. Okay. If you only like to trade the S&P, that's fine. You can just trade the S&P. If you just want to trade gold, that's okay. Crude, not a problem. There's always something for everybody, but what you're going to find after a while, it's going to just dawn on you out of the blue. Wait a minute, I'm trading the S&P just like I traded that gold trade. Same time frame, same indicators, same principle, and it worked out just fine. Wow. I wonder if I could do the same thing on the NQ, or silver, or the Russell. The answer, yes. Yes, you can. You can trade any market, any time frame, because the principle of the strategy is the same as the underlying principle upon which the markets operate. Okay, so real quick, let me give you, because today's Dr. Tom Day, he's going to be here in a minute. Time got away from me. Let me just find the Concierge Trade Alerts from last night. I'm going to give them to you if you want them. Grab a screenshot. There you go. Now, when I say a static report, I was scrolling through all those alerts. Those get posted as the opportunity presents. This comes out at the beginning of the session each night. shortly after the Globex open. You go to your chart, you put a couple lines in the sand, okay, at the appropriate places, and you wait for price to get to the line. Now, often the logic alerts will walk you right up to the doorstep of the concierge alerts. Okay, got a screenshot? Okay. All right, so let's pop real quick to the daily chart. We're printing a big red candle. Okay. This is daily. Leg, we retraced, right, to the BBC. We got below it, but we were still attached until this candle right here. This candle opened and closed below the BBC. That's a big deal. That's a heads up that this downside move may be more than just a deep retracement. Possibly it's the beginning of a reversal. See, on the way up, we went leg, retrace, leg, retrace, leg, retrace. Now look at it in the other direction. Leg, retrace, leg. I drew in this rectangle yesterday, this window of opportunity, situated right between the 50% and the 62% Fibonacci retracement of the last leg up. From the low to the high. Price right now doing its very best to get down to this 50%. We didn't, on this first move down, we didn't quite make it. There's an area. Now, if we can get past this low, now there's a window of opportunity from where we sit, okay, down to this low at about 33.06. And then this swing low is 32.95. Then you've got the 50% fib itself at 32.77. Okay, so that's where we are on a daily. That is our daily sentiment, which is obviously sideways to lower. Now, how deep will we go? Well, after the 50, there's the 62. But the area that I've really got my eye on, down here where the bullish cross took place, I foresee, and now we're getting into just opinion. I have an opinion that price will hit the 50 and bounce, it'll hit the 62 and bounce, but where it'll find real support. Now, if it doesn't find support here, then one might say, well, the market's in trouble. But we know that the markets always move higher over time. Yes, we have drawdowns and sell-offs and all those kinds of things. We've got evidence of that right here. But the indices, now, this isn't true of gold or crude or any other resource type stocks. But on the indices, those were built from the ground up to always go higher over time. We just saw that with the Dow. They kicked 3 companies to the curb, brought in 3 new, fresh, strong companies. That's going to, over time, always keep the price of the Dow and the S&P and the Russell and the NQ moving higher. Okay? So while everyone else is running around, the sky is falling, we're not so worried. We know we're just getting right. What now is a retracement. If we take this out, we're in a full-on reversal. Okay. Now, the fact that we did a leg or retracement, all of this rests on being able to take out that low. Okay. If we come down and do a double bottom and then get back above the BBC, well, then that's a signal that we're going back to challenge the swing high. Now, I'm explaining all of this on a daily chart, and you might be thinking, but I don't trade a daily chart. That's okay. Doesn't matter what time frame chart you trade, the underlying principle is the same. Okay, so let's go to a 30-minute chart of the S&P. Okay. All right. Last night on the S&P, the concierge alert was to be short 33.69. And that's right here. Now, Again, this is on top of whatever Logic 247 alert that we just scrolled through. Okay, so the alert every one of our traders got. Consider being short. 33.69. Okay, so there it is. Now the initial target, because we're so close, obviously is the weekly trading zone right below. From 69 to 64, that's 5 points. At $50 a point, that's $250 per contract traded, or 2.5 weeks worth of passport. Okay. Now, when price finds support, okay, and as price drops and hits a weekly zone, that's what we anticipate. We anticipate support. We found support. We bounced just enough to get back above the trigger, because important prices and important areas are almost always tested. So we bounce back up. We find resistance here at the step line. Okay, it's kind of a step line red and falling combination. Now, it's always important to look at your chart before you trade an alert, because you want to make sure on a short that price is below the BBC and you're accompanied by red and falling. Okay, so the first trigger was from 69 to 64. That was 5 points. That's what the market made available. And we got back above the trigger. Remember, important prices, important areas, almost always tested. The swing low is actually 33.10. So 69, 59. Okay, so that's a 59-point move. 59 points. Okay, now I could do it in my head, but I'm not. 59 times 50. That's a $2,950 per contract move. A couple of those will buy you a lifetime passport. Again, trying to make this thing as simple as we possibly can. What level of expertise did you need to execute this trade last night? Well, I mean, you got to know what a chart is. You got to understand the basic concept of trading. We have videos to help you if you're really brand new with trading. Valerie will help you. She'll do a webinar or a mentoring session with you if you need some of that real basic stuff. She's made some videos, I think, as well. But you have to be present. You have to know how to put on the trade. You have to be able to operate the DOM, or you can trade off the chart. So this alert, okay, this one right here, came out last night at 6:40 p.m. Eastern. Be short, 33.69. There's your first trade, 5 points. Back above the trigger. Now we go for 59 points. As price pulled back up to the BBC, we expect that to be good resistance, and it was. Gave us another leg to the downside. Although I would not have executed on this one until I got below blue and climbing. Okay, and where did we find support? We found support just above this swing low. So let me draw a trend line like so, and you can see we got a low, we got a higher low, and we got a higher low. Okay, now as price pulls up to the BBC right here, and blue and climbing just shifted over to red and falling, I'd love to see this thing in that perfect world punch up just a little bit higher. Here on this previous swing, where did we get resistance? Right where we would expect, at the weekly trading zone. It's very important that you get the zones on your chart as soon as they're published Monday morning, 6:15 a.m. Eastern. We've been publishing them since December 14th of 2009. Okay? Get them on your chart. They will help you. They will guide you. Now, if we can rally ourselves up here, halt. We need a green candle to get us there. But as soon as we start printing a red candle, then we can get short a very small stop loss, and we can trade back down. Remember, we got a low, a higher low, and a higher low. So we're going to anticipate this will be a higher low. So that will affect the size of our window of opportunity. Okay, so we're going up here to touch, then we need to get rejected, right? And then we need to be printing a red candle as we come back down through the top of the window of opportunity. And then we'll look to get out before we get to this low. Now, if all of a sudden, sellers start coming out of the woodwork and this thing just tanks, well, there's no reason you can't stay with it. Okay. Now, getting out at a swing low or swing high is difficult. Practically impossible. Why? Well, because you don't know it's a swing high or swing low until after the fact. That's the reason. Okay. Now, this is a current weekly zone at 93.94. This is a current weekly zone at 63.64. And we have a weekly trading zone published Monday morning at 6:15 a.m. Eastern at 33.30. Come on. Just do it. I'm ready to give up. I gave up. Gave up. All right, Dr. Tom should be here in just a moment. Let's see if I see him in the chat box. Dr. Tom, if you're here, just go ahead and let me know. All right, so we got 33.30 up there, Herculean effort. All right. So we actually pushed down through this zone. So if you were in this trade as you were heading into this zone, if you took this second trigger, right, as you're coming down, you get an exit signal right here. Now you might say, you know what, I'm staying into the zone below, but this step line, okay, when you're in a short trade, when this step line gets on the right side of red and falling, that tells you the market or the move may be running out of steam. And so when you get a green candle that closes above the step line, like here at 33.47 and a quarter, that would be, let's just make it 33.48, round it up, 33.48, exit signal. Okay, and that exit signal is this candle right there. Okay, now so that changes the math a bit because remember, getting out of the swing low kind of hard, right? So if we say 33.69 minus 33.48, the exit signal, that's 21 S&P points at $50 a point. That's $1,000 per contract traded. Ah, there's Dr. Tom. Let me get your mic open. Okay, after we talk to Dr. Tom, we will recap the rest of the alerts. So stand by, Dr. Tom. I'm coming your way. There we go. Dr.
Okay.
Tom, welcome to the show.
Thank you very much. I felt like I had a muzzle on there,
Yes, yeah.
talking, and no one was hearing me. So thank you for rescuing me.
You're welcome. Do you want me to send you the charts?
If you don't mind.
I'll do it. There you go. All you have to do is accept.
Right.
And you did. Well, that's a big question. My first question will be, does he have the power to do such a thing?
There we go. So, do you see the slide?
I do, yeah, it looks perfect.
And let me just go down to the next slide. You see that?
I do.
Okay, good.
They both look beautiful.
Because it didn't want to change slides. So, I'm posing a question here. I'm going to give you my answer. Mm-hmm. But let's ask the audience for their opinions on this, if you don't mind. And we could talk about after a few people get in. Do you think that Trump will return the U.S. to the gold standard in his second year?
In his second term.
I'm sorry.
That's what
second term.
Okay, I thought you might have meant the second year of the second term, but okay, guys, what do you think? Will he? Won't he? I'm unable to answer the question because I don't know if he can. So I'll answer it this way. I believe he would like to. And I could be wrong because I don't really know where he stands on this. But I would certainly think he would envision that. That would certainly be a huge notch in his belt in the history books of politics and world government.
That's for sure. We'll hear from Trump in his own words, but is anyone hazarding
I got a couple no's, a couple yeses.
Okay. Anybody give any reasons why
No.
they think? Okay.
No.
Well, let's go ahead and get started then. Something I forget to do sometimes, so I'm just going to do it up front. If you go to CFRNgold.com, we'll send you the Gold Education Starter Package. If you'd like to talk to me directly, there's my telephone number, my direct line to my office, 561-753-5998. If you call the number, make sure that you tell them that Dwayne sent you. And if you go to the website, it'll automatically let us know. I figure you're going to buy gold anyway. And so if you buy it through CFRN Gold, then you're helping the Christian Financial Radio Network's ministry. So
Joe did put something in the chat box. He said, yes, because we are becoming energy dependent. No more reason for petrodollar. Or he is doing to gain votes. Okay. So I guess he's kind of throwing a question back at you. Or is he doing it to gain votes? What are your thoughts?
So I think you read energy dependent. You meant independent, right?
I'm sorry, did I mispronounce that? Yes, he did type in independent.
Okay. So, yeah, I mean, we're going to not be getting nearly as much money as we used to by being the petrodollar. All petrodollar means is that it's the U.S. dollar, and that there's been an agreement for years that all the oil purchased and sold would be denominated in dollars. So we get a little rake off of that, just a small percentage, but there's a lot of oil.
And who was able to pull that deal off?
Well, it actually happened in Bretton Woods at the agreement there in 1944.
Okay.
That's where the major industrial nations agreed that the U.S. would become the world reserve currency. That's where the World Bank and the International Monetary Fund, usually called just IMF, were established. The UN was already established at that point. They originally called it the League of Nations, and it was the UN. All of these international organizations, we contribute 50% or more of all the money that goes to support them, even though we're only 5% of the world population. So Trump's working to change that too. But yeah, even wires. You've heard of the SWIFT wire system.
Oh yeah.
Anytime you send a wire or receive a wire internationally, it has to go through the New York Fed, and they get a little percentage off of that. So it's this crazy. If someone was in Niagara Falls, Canada, and sent a wire to someone in Niagara Falls, New York, it's an international wire. They can be 15 miles apart, but it's still an international wire, and it has to go through the New York Fed before it gets to that bank. And the Fed gets a piece of it. So that's been good for the United States, but we're now in serious danger of China becoming the world reserve currency. And
who would make that decision?
Well, today no one can. The UN cannot, the IMF cannot, the World Bank cannot, the European Union can't. That decision is made by the market. In other words, the central banks of the world, and there's about 200 of them, whatever they hold in reserves are reserve currencies. But any currency that they have 50% or more of their assets in is the WRC, the world reserve currency. And right now we hold that spot because I don't know if anybody on your in your audience trades Forex, but if they do, they know that the dollar is the strongest currency right now.
Yeah.
Well, what does that really mean? It means that one crappy currency is stronger than the other crappy currencies. So they're all crappy,
Right.
but we're just less crappy.
Less crappy.
You know, maybe we have a little air freshener in the room, you know, that kind of thing. Now, when you take all the major currencies in the world, there's 10 of them, that represent 98% of the GDP of the world, and you average them together, their performance, and compare them to gold, in any given decade, gold will be up about 4 times more, or 400% better than all the currencies put together. So gold is really the world reserve currency, because as you'll see, every central bank in the world owns gold.
Right. Right.
They tell us that you shouldn't own gold, that you should use the money they print, because they can print as much as they want.
Right.
They can't print gold. So the central banks, including our Federal Reserve, tell anyone who will listen, don't buy gold. But all the central banks own gold. Sounds like a little hypocrisy there.
Well, something going on.
Trump wants to make America great again, and he's done a lot in that regard. But in order to really make America what it was before 1933, where we were a Deuteronomy nation, we lent to every nation, we borrowed from none, as God told Israel to do in Deuteronomy. Today, we owe every central bank in the world, including little banana republics that most of us have never heard of. We owe everybody money, and we're not lending money. We do give money away, but it's only a tiny percentage of our GDP we give away in foreign aid to bring other countries into our orbit and make them like us, and you use our version of government and so on. But in order to truly make America great again, make it what it once was, we have to make America gold again. There's no other way to do it. I was at CPAC, and Trump said something very interesting. CPAC is the Conservative Political Action Conference, and it was held in Washington, D.C. Direct quote here: global cooperation, dealing with other countries, getting along with other countries is good. It's very important. But there is no such thing as a global anthem, a global currency, or a global flag. Well, that's kind of a strange statement to make, because there is a global currency, and it's recognized by everyone, and it's the U.S. dollar. Okay, so it is the world reserve currency because the central banks have voted with their feet by buying U.S. dollars. So what did he really mean? I think he was hinting there that a true global currency would not be the U.S. dollar. It would be a gold-backed dollar, preferably the U.S. dollar backed by gold, but a gold currency. And several other things he said do more than hint about his admiration for the gold standard. He says it right out. He said, we used to have a very, very solid country because it was based on a gold standard. Well, you can see where his thinking is. We used to be very solid. We're not very solid now. And anybody who studies this stuff knows that we have more debt than any country that's ever existed. So we do not have a solid economy. We look like we do because we're just able to keep printing money. But as I've mentioned before, it's not possible to continue to print money. Everybody has this, this image you see on TV, the printing press is running and they're printing trillions and trillions of dollars. And we think that can happen forever. Well, first of all, only 6% of our money is produced that way anymore in paper. Almost all of it is created by little computer nerds sitting around somewhere just creating money on a computer.
Right.
Backed by nothing. I'm sorry?
No, I agree. Yeah. No, I
So he's recognizing this, that our economy is not solid anymore because it's based on debt, and he's nostalgic about the time before he was born when we had a gold standard, when we're on the gold standard, which, by the way, is a God standard. It's throughout the Bible. So what happened to the importance of gold? Well, you've heard me talk about the crime of the century, so I won't take much time on this. But it's interesting that FDR's first official act was dumping the gold standard. And he did it illegally and unconstitutionally, by the way. He stole 40% of the wealth of the nation and had to build Fort Knox to make a huge underground vault to store the 549 metric tons of gold that he had stolen from people in coin form, melted down, put into bars, and then they built this military base over top of it to protect it. And by the way, to add insult to injury, you've heard me talk about before about the fact that he took 40% of the wealth of the United States. Right. That was based on $20 per ounce gold. After he'd confiscated all the gold, then he raised the price of gold to $37, again, by executive order. So that was a 40% profit on his theft that the government made. If he's going to steal your money, at least he should have been nice enough to raise the price of gold from 20 to 37 first, so where you at least gotten more Federal Reserve dollars, even though they're not worth much. They're worth something. Right. But he did it the wrong way. So why did the U.S. dump the gold standard? Actually, I should say, why did FDR dump the gold standard? Because the U.S. didn't do it. It was strictly greed, power, and corruption. If he could just print money as much as he wanted to, then he could have anything he wanted. He could buy as many votes as he wanted. It gave him tremendous power. Right. Most people, when he confiscated the gold, if you read literature from the time, they thought he was crazy. They said, there's no way this man will ever be reelected. He may even be impeached. But instead, he was elected 4 times. No president has ever been elected more than twice.
Right.
How? Because he used his power to print money to buy votes. Okay. And then, of course, there's a lot of corruption going on, particularly the thing I just mentioned, where he stole the gold first and then changed the price of it. By the way, folks, I always tell people when I'm preaching, don't take my word for anything. Check me out in the Bible. Well, same thing here. Go to, I thought I had it up here, but go to just search for Executive Order 6102. Don't take this just because I say it. Look it up for yourself. I have a good friend. He's one of the top constitutional experts in the country. And we were having lunch together one time, and I told him about the things we're talking about today. And he was looking at me dumbfounded. I mean, his mouth was literally gaping. And he finally said to me, Tom, he said, I know you're telling me the truth because you're not going to lie to me, but I can't believe what you're telling me. Because nowhere in my history books, when I was in school, nowhere in my curriculum when I was at college. And he said, by the way, I have a degree in economics. Not one time during my graduate studies in economics was the gold confiscation mentioned, the fact that the Federal Reserve is not federal, that it's unconstitutional. And he said, I was a legislator for the state of Texas. I voted on bills, on spending bills, that if I had known what you just told me, I would most certainly have voted differently. But can you imagine this? A guy with an education great enough to get him to where he got,
Right.
and he didn't know anything about this stuff. So you all are privileged to know about it because the vast majority of Americans don't. Okay, first, a little primer on executive orders. What are they? EOs are legally binding orders given by the president to federal administrative agencies. And the same thing is true at state level, given by governors to state administrative agencies. But remember the separation of powers, right? The president, the administrative agencies, those are the administrative branch. Executive orders are used to direct federal agencies and officials, which the president and the governor has the authority to do, in their execution, I should have underlined this, of congressionally established laws or policies. So an executive order, it says it's legally binding, but only if it's to further establish policies or laws of Congress. And this executive order wasn't. In fact, most executive orders are not. So our executive order constitutional. Supreme Court has said that executive orders from the president must be supported by the Constitution, whether from a clause granting a specific power, and those are called the enumerated powers. These are specific things in the Constitution that the founders gave authority to the executive branch to do, or by Congress delegating such to the executive branch. Because I don't have time to go into this in detail, but probably if you asked 1,000 people on the street, does the U.S. have 3 co-equal branches of government? They would say yes, right. Because people repeat that so often that they just think it's true.
Right.
But it's not true at all. The founders intended the legislative branch, because it represents the people most closely, to be the strongest, the executive or administrative branch to be the next strongest, because it's the next most responsive to the people. And the judiciary is supposed to be the weakest branch of all, because it's not responsive at all. These guys, once they're appointed and approved by Congress, not by the people, but once they are, they're there for life. If they turn into flaming Nazi crazy whatevers, we have no recourse. You can impeach Supreme Court justice, but that just doesn't happen. So common sense tells you that. The order in which they're in the Constitution, the very first article of the Constitution talks about the executive branch. The second article of the Constitution talks about the legislative, and the judiciary is a distant third. If you go up to Washington, D.C. and do a tour of the Capitol, and you look at the original Supreme Court courtroom, it's smaller than my living room. It's a dark, dingy place, no windows, hardly any room in the place.
Right.
And the judiciary did not have much respect. But both the judiciary and the administrative branch have, over the years, stolen power that belongs to Congress and taken it unto themselves. But the main way you can measure who's supposed to have the power is by the enumerated powers. The founding fathers gave the judiciary only 4 powers. I won't go into them, but just remember that number, 4 enumerated powers specifically granted to that branch. Anything that's not granted to one of the 3 branches of government, the Constitution says is reserved unto the states and unto the people. So again, all 3 branches have been stealing power from the states and from the citizens and taking power to themselves, usurping power. Okay? So the judiciary has 4 enumerated powers. The administrative branch has 16, 4 times as much. That tells you right there that the administrative branch is supposed to have more power than the judiciary. Okay? But then when you get to the Congress, it has 4 times as many powers, 64 to be exact. I don't know if they meant it to be that way, but it just works out very nicely. 4, 16, 64 that are specifically given to Congress. Believe it or not, Congress could actually has the power to tell the Supreme Court, you cannot hear cases on such and such. There would be no Roe versus Wade if we'd had a conservative Congress, because they would have just told the Supreme Court, no, you can't hear the case. And since they had the power of the purse, they could just cut off all the money to the Supreme Court. They can't fire them, but they can starve them. So
he who has
that's
the goal
power.
makes the rules.
Amen. So are they constitutional? Yes, but in a limited way. So either the Constitution has to grant the executive a specific power, or Congress, more often, would delegate that power that belongs to them to the executive branch. And a little quick history. Congress used to only meet once every 2 years for a couple of months. We didn't have professional politicians. Most of the people who were in Congress were citizen legislators. They got paid just a pittance, and they were mostly
no air conditioning back then.
I'm sorry?
There was no air conditioning, so very little got done in the nation's hot, humid capital during the summer months.
Yeah, there's more than one reason why they call it a swamp, because it actually was built on a swamp, and so swamp creatures populate the big fancy buildings up there. But also, as Dwayne says, it's extremely hot and humid. But the point is that if something important came up, like we were threatened with war by another country, to assemble Congress, some people would have to ride by horseback for weeks, maybe months, to get to Washington.
Right.
So we had to have an executive power that could step into the breach. But the Congress always had the power to reverse that or modify it. And the fact is, that they've never had the guts to do it. So constitutional, yes, sort of, but the way they're being used today, absolutely not. Especially the way Obama, he said specifically, he said, you know, if we can't get the Congress to do the right thing, then I'll just do it myself. I have a pen, you know, and I have the power. So are executive orders laws? That's the real question here. No, 1,000 times no. Executive orders are simply orders issued by a president or a governor that are enforceable by members of the executive branch only, right? Until it's either overturned by a law established by Congress or overturned by a ruling of a court. Now, what should happen is that executive orders should be followed up by congressional action to validate it. But most executive orders just sit out there waiting for Congress or a court to overturn them. They are not laws. And yet we hear these governors who are saying, you know, you have to wear a mask when you're having sex. And well, I'm serious.
No, I know you are. It's just, it's insanity.
I heard a medical doctor say that. He was on the council, the China virus council of one of the states, and he advised that people should wear a mask when they're having sex. I was just like, are you insane? But, you know, the lockdowns that are causing so much domestic violence, so much suicide, prescriptions for antidepressants have almost tripled since the lockdowns.
Yeah, it's been bad.
And those are all done by executive order, and the Congress, the legislative branch that the people elected to make laws are ignored. In Michigan, this Governor Whitmer, her legislative branch has told her several times, we are rescinding your emergency powers. We are going to debate them and do things properly now. It was necessary maybe initially in the first emergent phase for you to use executive orders, but that time has passed. It's, what, 8 months, 9 months now since the first case was diagnosed in the United States. But she just ignores the legislature and keeps on issuing orders. You can go to the beach, but you can't go on the water. You know, you can own a boat, but you can't put the boat in the water. Her husband did that, by the way, and was caught. The cities and the states can go and do lawn work and, you know, mow the parks and trim the trees, but private companies are not allowed to do that in Michigan.
Wow.
You're not even allowed to buy gardening supplies. You shut down the gardening stores. Really? And the Home Depots are not allowed to sell seeds, fertilizer, or gardening tools.
I did not know that.
It's just insanity. And she keeps saying, you have to obey the law. I gave an executive order. It's the law. And she even threatens people. She allowed the protests, the people that were burning and looting, she allowed that. But when people came and protested her heavy-handed, draconian executive orders, she threatened to make them worse, to punish the people for peacefully protesting, as the Constitution gives them the authority and power to do, peaceably assembling and petitioning their government. And she said, if you don't stop doing it, I will make the lockdowns even worse. So, no, executive orders are not laws. And a lot of churches now are just flat denying or just refusing to acknowledge the executive orders, like this idiot Gavin Newsom in California. He says only 50 people can be in a church service. Well, if that's a church of 100 people, maybe that's workable, because half the people probably wouldn't be coming out anyway. But a church of 5,000 people, you'd have to do a church service every 30 minutes, 24 hours a day, 7 days a week, and you still wouldn't be able to get all the people into a church service.
Or you could call it a protest, and then everybody can come.
Right. They can just say, this is a meeting of Black Lives Matter, and then or Antifa or whatever.
If those organizations have a right to protest us, we should have a right to protest them. And so, hey, we're just here today to protest any of those organizations that you just named, Antifa, the whole bunch.
Yeah. Well, Newsom has even said that you can have church services with 50 people, and they had to fight to get that. But he said you can't sing. You're not allowed to sing in church. I mean, it's crazy. So the people need to engage in civil disobedience. Around the country now in Democrat states, many businesses are just opening up, and they say, okay, come and arrest me if you want to, but I have to feed my family. If I don't run my business, I can get foreclosed on my building, or the landlord is going to terminate my lease, and I'll have no business to go back to. Churches are meeting in California, and they're saying to Newsom, come and arrest us. Dr. MacArthur, who has a very, very large church there, was on TV the other day. He says, hey, if they want to arrest me, I'll just start a prison ministry. I don't care. Right. If the Lord wants me in prison, I'll go. And if he doesn't, they can't do it. So anyway, we need to start challenging and basically on the really bad governors doing recall elections. So back to the main subject, though. What FDR did was absolutely unconstitutional. It was Executive Order 6102. Again, please look it up and see what he said. He said, if you are not a sheeple, not a people, but a sheeple, you don't act like little sheep and trot down to the bank and turn in your gold for worthless Federal Reserve notes, then you can go to prison for 10 years. Can you imagine being a federal felon with the crime of owning your own money?
Yeah.
It was legal money one day.
Right.
It just...
So insanity is nothing new. It's been around a long time, apparently.
Yes, sir. So it certainly wasn't made to implement a law passed by Congress, because Congress had not, and they still to this day have not, validated Executive Order 6102. It wasn't in response to a directive from Congress. That's another way that an executive order can be legal. And the third way is if it came from a enumerated power that the Constitution clearly delegated to the president. Well, in this case, it directly contravened the very clear intent of the Constitution. The Constitution says only Congress can create money, and only silver and gold are money. The only exception is if it's paper money, it has to be backed one for one with specie, which is silver and gold. So you had $20, $50, $100 bills. Back in those days, they went up to $5,000 bills. But they were gold certificates. They were directly backed by gold. And then your smaller money, the tens, the fives, and the singles, were silver certificates. So they were both backed by precious metals. So he totally violated the Constitution. Because the Constitution says this, if you go to conservativetruth.org, that's my political website, if you will.
There's a lot of great articles on that site, folks. You should definitely check it out. And there's new articles written weekly, conservativetruth.org.
Yes, thank you, Dwayne. Yeah, for the last 20 years, every single week except Christmas week, we have published a full slate of articles. But also on the site, and the reason I mention it is if you go to the main page on the left, there's all the founding documents. We made it real easy because people are always saying to me, well, this is constitutional, and that's not constitutional. And what they really mean is I like this or I don't like it, because what they're saying is not the Constitution at all. And I asked them, have you ever actually read the Constitution? Well, I think we did it back in grade school. I said, well, go do it now. When I go and speak, I pass out pocket constitutions. And I challenge people to read it. And I say, how many people have read the Constitution in the last 20 years? And hardly anybody raises their hand. And I say, is it because it's so long and complicated that you've avoided reading it? And most of them raise their hand, yeah, it's too long. And then I tell them, it takes 40 minutes if you read slow.
Really?
And yeah, the whole Constitution.
Wow.
You know, I think we ought to have a constitutional amendment, or Congress should pass a law that no law passed by Congress can have more words in it than the Constitution.
That would be a tough one. How many pages?
That way people can actually understand the laws.
How many? There was some incredible number of pages to the Obamacare Act. The ones that people admitted they never read.
12,000 pages, I believe.
Yeah. Oh my
and
goodness.
None of the people that voted on it had read it.
Yeah, and they admitted it.
It was
Of course I haven't read it. That's when reporters would ask the question of important people who should have read it. They said, no, of course I haven't read it. You know, who could read all that? And that was the whole purpose.
But I voted on it.
Yeah,
you know,
but I voted on it.
Because Nancy Pelosi told me to vote for it, so I did.
They told me to. I just do what I'm told. Yeah, but you're supposed to do what you're told by your constituents, not the other guys. But anyway.
That's another pet peeve of mine. Both the Senate Majority Leader and the Speaker of the House, one of which is a Republican currently, one of which is Democrat. So this is not a partisan statement here. But those two people have way too much power. And it wasn't given to them by the Constitution. It was given to them by rules that they passed. So basically, Nancy Pelosi can say whether a law can even be discussed, much less voted on. If she refuses to allow it to come to the floor, 90% of the people, Democrats and Republicans, could be for it. But if she says no, it doesn't get there. And the same thing into Congress or in the Senate. That's not constitutional government. But back to my subject for today, I love rabbit trails. If you go to Conservative Truth, click on the Constitution, search for money, credit, gold, silver, coin, currency, any word that you can think of that has anything to do with money. And you find only two principles. Number one, that only Congress can coin money. So the Federal Reserve is totally unconstitutional. Congress does not have the authority to subcontract their responsibilities to a non-federal, privately owned agency. And number two, only silver and gold, because it says coin money. People say, well, the Founding Fathers didn't know about paper money back then. Of course they did. Our first money, the Continental dollar, was backed by nothing, and it hyperinflated so badly that it was worth 1/10 of a penny when we got our first gold and silver-backed money. So they certainly knew about paper money. They just knew it was bad. And that's why they said gold and silver. So that's all that the Constitution allows. It's all that has been used for 6,000 years in hundreds of civilizations. And gold and silver are also the only biblical money. So why in the world your financial planner would tell you that gold is risky, or that the central banks would encourage people to buy stocks or bonds rather than gold? It's crazy. So how did he get away with it? If everything I'm saying is true, and it is, how did he get away with it? Well, he issued an unlawful executive order that the Democrat-controlled Congress could have challenged and could have overturned, but they never did. And no Congress since then has done so. They just sort of let it sit. But this allowed the senators and congressmen to say, Well, I didn't vote for that. FDR is crazy. I certainly didn't vote for that. But they did vote for it because they sat on their hands. They refused to use their authority to save the gold standard. They could have done it quite easily, but they didn't want to. They are corrupt. They wanted the same power that FDR did. So, but back to the big question, why did the U.S. dump the gold standard, which, if you study biblical economics, you know is also the God standard. Matter of fact, it's not even really the gold standard. The gold standard is the God standard because God invented it. Man thinks he thought it up, but it was already well established in the Bible that gold and silver were the only money. So the U.S. didn't really dump the gold standard. I should say here, why did FDR dump the gold standard? I have to change the slide. It was simply so that the nation could borrow money and never repay it. Now, we're all good people, right? We borrow money.
Try to be.
We know we have an obligation to repay the money. So we think that other people think the same way. We think that our politicians, our national government, should think the same way. If you have to borrow money, like Andrew Jackson, when he became president, the White House roof was leaking so badly that it was uninhabitable. And so his advisors told me to borrow money, use the credit of the United States to borrow money. And he said, no. The only reason for a government to borrow money is if you're attacked and you're at war and you need money to save the country. So he moved into Blair House, which today is the vice president's mansion. And he lived there for 2 years until they saved up enough money. And then he had the repairs done to the roof.
Wow.
I mean, that was a real president. He was the last president to leave office with no national debt. But today, we keep adding to the debt, and Congress has no intention of ever repaying it, because if they did intend to do so, they would stop adding to it, and they would start trying to cut spending and increase revenues and get the sucker paid off. But they don't think they're ever going to have to. So, does anybody really think that Congress has any intention to repay the debt? If you think yes, then I have a bridge that I want to talk to you about. You might want to buy it.
Big bridge,
So,
really big bridge.
Yes. So in economic language, this is called free money. Okay. You can just print up all you want to. One of my favorite jokes is, what do you call a guy who makes really beautiful counterfeit money in his basement?
Counterfeiter?
There you go. What do you call a guy in the swamp who makes counterfeit money?
Federal banker?
A congressman.
Congressman,
Yeah.
okay.
The government.
All right.
They're the ones that authorize all this spending. So it sounds great in principle. You know, just print money whenever you need money. It's just like, if I need more grits, I go down to the grocery store and get grits, right? So the government needs more money. Hey, just print some more money up. But it doesn't really work. We think we can spend as much as we want and never have to worry about repaying it. But there's a huge downside that's looming. It's a dark cloud that's hanging over our nation right now, and it's called economic collapse. We are going to see hyperinflation. Peter Schiff, who's probably one of the smartest economists in the world, not just in the United States, recently in a speech said hyperinflation used to be the worst case scenario. He said, unfortunately today, hyperinflation is the most likely scenario because we don't owe $27 trillion. If we use the same accounting standards as the rest of the world does, and the IMF measures the debt of every country in the world, they don't look at us as $27 trillion. They look at us as around $200 trillion. because we only report the direct debt, the treasury bills and bonds and notes that we sold, which we're supposed to repay but have no plans of repaying. We don't include in the debt what every other country in the world does, which is the unfunded liabilities, the trillions and trillions and trillions of dollars that we are obligated to pay for Social Security, Medicare, and Medicaid. People think that when they pay money in the Social Security system, that when they draw the money, they're getting back what they paid in. Well, I deserve it. I paid into it. If you draw Social Security and you live a normal lifespan, will probably receive about 5 to 6 times as much money as you ever put in. Okay, so this is not your money. It's the money that's being taken by force by the government from younger people. If you're getting Medicare, the average Medicare recipient in his lifetime will receive 16 times the benefits that he ever paid in. Well, who's paying for it? Our children and our grandchildren. So the debt just keeps growing, and every time there's been a financial crisis, hyperinflation or whatever you want to call it, it has been precipitated by a debt crisis. And again, we have more debt than any other nation. So the storm clouds are brewing. One day the foolish financial world will wake up and realize that we can't keep doing this. Right now, they're either stupid or they're deliberately turning a blind eye to the facts. Ron Paul, Dr. Ron Paul, he's a medical doctor, was in Congress for 20 years. And he was the only person there in either house of Congress that really understood money. He wrote a great book called In the Fed. The Fed is destroying our country by enabling it to go deeper and deeper into debt. But he finally got tired and he left Congress. On the day that this happens, you'd better not own stocks or really any paper assets on that day, because all your paper assets will evaporate. Oh, but I have an annuity. It's guaranteed. Guaranteed by what? You should always ask that question. Guaranteed by what? Well, it's guaranteed by the insurance company. Okay, well, where's the guarantee that the insurance company won't go out of business? Insurance companies go out of business. Well, I have a CD. It's guaranteed by the bank. Banks go out of business much more often than insurance companies do. I have a pension from a major national company. What about all the pensioners from the multiple major national companies that have gone bankrupt? Their pensions evaporated. Oh, I've got one of these new plans that the financial planners are pushing, where I get a guaranteed return every year, and even if the stock market goes down, I still get that return. Well, how can they do that? How is that possible? It's only possible because when the market's going up, if it's up 16%, you still get your 6%. So technically they save that extra 10% for the times when the market's down, and they can still pay your little pitiful 6%, which is 1% over inflation. But what if the market goes down and stays down? They cannot fulfill their obligation. They will go bankrupt. So a major principle that everybody needs to understand is that if anybody guarantees you a certain percentage return on investment, whether it's a CD or annuity, then they're also guaranteeing that you're going to lose money, because they set the amount that they're going to pay you below the rate of inflation or right at it. So you will lose money in any guaranteed asset. So safe assets are not safe. The only really safe asset is precious metals. So why not just restore the gold standard? Why not do it right now? Well, in order to do that, number one, you'd have to have politicians who have the guts to say to the people, okay, there's no more free stuff. You have to work for what you get. If you're disabled, if you just can't work, if you're too old, then you get welfare. But if you're able-bodied, we are not going to pay you to sit around the house, play video games, and smoke dope. You get your butt out and work, or you don't eat. The Bible says if a man will not work, he cannot eat. Rich people don't get Social Security anymore. Why should a millionaire get $2,000 or $3,000 a month of Social Security? Well, because I paid into it.
Well,
yeah. You really didn't. Okay. But the other big reason is this. We have so little gold, roughly 4% of all the trillions of dollars that we spent, that with my calculations, we would have to revalue gold to $42,500. Other people that have done the same calculations that do them differently and probably smarter than I am are saying $50,000 to $80,000 an ounce. So by the end of last year, that would be unthinkable because only 2% of Americans own physical gold. And so that would leave 98% of the people hanging out in the wind. You'd have a bunch of people that if they just had 5 or 6 ounces of gold are worth $250,000, and everybody else, their money's worth nothing. Today, it's a lot more possible because about 20% has been an amazing shift in the first 3 months after the China virus. There was a poll done, and 12% of American citizens owned physical gold, not paper gold. It does you no good to have an IRA that has gold in it because you have no access to it, or an ETF, or a gold mining stock, or gold mutual fund. You don't have gold, you have a piece of paper that says you have gold, and all the paper is going to go away. Okay. But at 12% of people owning gold, that's a 600% increase in 3 months. Now we're getting somewhere. And today, there's not been another formal poll done, but we're looking at over 20% of Americans that own gold. So it would be possible to go back to the gold standard. But again, there has to be the political will to do it. I think Trump has it, and I'm hopeful that in his second term, he will do so. When the U.S. government legalized private ownership of gold in 1975, remember, in 1933, not only did FDR steal the gold, but he made it illegal for Americans to own gold. Right. Trump was an aggressive investor in gold. He called making money with gold easier than the construction business. So we'll go into this next week, but I believe that he is from his own words, a strong gold standard advocate. But as we'll discuss more in length next week, presidents do in their second term what they wanted to do in their first term, but they knew if they did it, they wouldn't get reelected. Because Wall Street, which donates billions and billions of dollars to the Democrats, if they knew that Trump was going to go back to a gold standard, which would cut into their profits hugely, they would donate even more billions and make sure he never got reelected. But I suspect that he's going to at least try. But we'll look into this more next week. In the meantime, until the government goes back on a gold standard, or heaven forbid China puts its money in the gold standard and takes away the world reserve currency status from us, put your family on the gold standard. Put your business on the gold. I'm seeing more and more businesses buying gold than I have in all the years I've been doing this. Churches are now buying gold. they're saying, if the central banks say it's good by their actions, but it's bad by their words, I'm going to follow their actions. So your family, your church, your business, your ministry, get gold, just set it back, hold on to it, and it could someday save your life.
And make sure you're actually buying gold and not just the idea of gold. Some traveling salesman come through town, hold a revival, talk to you about how gold's God's money, and then all of a sudden he's got a church and all the parishioners wrapped up in some complicated scheme-a-reamer that at the end of the day you don't actually own physical gold that you can hold. It looks pretty, the numbers dance, but you got to be real careful, especially in the current climate. And I know Dr. Tom has urged you to be very careful himself online. But sometimes when we're in a church setting, okay, well, this person's already been vetted either by the denomination or by the pastor, but how well have they been vetted? And I mean, there's this one show that plays on CNBC where people are always getting tripped up in all kinds of scams and schemes and whatnot. And that's a very common one, leaning on the religious relationship, etc. Woe to the man that comes into God's house to rob God's people. That's not good.
Dwayne, I've seen the same thing happen with oil.
Sure.
We had a guy that came through, and he was telling people, we're going to drill for oil in Israel. It's going to help God's people. And so it was a total scam.
Is that guy with was it by the Dead Sea? There was some place that supposedly they'd figured it out, by studying the original manuscripts and whatnot, where there was supposed to be this mother lode of oil. There's probably been more than one of these type of scenarios, so I don't know if we're talking about the same one, but yeah.
Well, like P.T. Barnum said, there's a new scam born every minute.
Yeah.
So be careful.
Be careful.
Watch out for counterfeit gold, and don't buy gold in paper form, because when the emergency happens, and it will, it may not happen tomorrow, maybe next year, I don't know. But when it happens, then having gold in somebody else's vault, or heaven forbid in the GLD ETF, Dwayne and I are probably two of the only people in the country that have ever read the prospectus on that, but they do not hold gold bullion like they say they do. They have a very tiny amount, and it's mostly derivatives. So if you ever try to get your gold that you think you own by owning that ETF, good luck. It's not going to happen.
Not going to happen.
No.
All right, Dr. Tom.
It's great talking with you all. God bless you.
As
Have a
always.
wonderful rest of the day.
Thank you so much. I'll talk to you real soon.
Okay. Bye-bye.
All right. Thank you. Bye-bye. Okie doke. Here we are back with the S&P 500 Emini Futures. All right. We've already discussed the Concierge Trade Alert for last night. It was, to be short, 33.69. Traded once, gave up 5 points, got back above the trigger, triggered again, gave up a total of 59 points. It also gave an exit signal right here at 33.48. And I know I already did the math on that, but I'll do it again. 69 minus 48. It's 21 points. $50 a point. It's $1,000, $1,050. That's getting in here at the published trigger, at the alert price that was sent to you last night, and then exiting as your step line gets on the right side of red and falling, and you get a green close above that step line. Okay, so in there, out there, that move was worth $1,000 per contract traded. Obviously, the longer you trade, you earn the right to trade more contracts, always adding additional contracts one at a time, and always adding them with profit you earned in the market. If this is a $1,000 move just from the entry to the exit signal on one contract. Well, if you're trading 10, obviously, you could do the math on that. You just can't put the cart before the horse, okay? Got to take it slow, one step at a time. We want you to spend time in the simulator learning the strategy before you go live, okay? It's important. It's important for your success. The 24/20 blueprint wants you to put together 10 consecutive days in a row where you reach your goal in 10 trades or less before you go live. Once you go live with only one contract. Now, your goal becomes to increase your account balance, the real money, by $2,000. Once you've done that, then you get a green light to add the second contract, which is funded with the profit you earned from trading the first contract. And so goes the third and the fourth and the fifth and the 10th. Okay? That's how to build a profitable trading business. Nice and slow. No overnight get rich quick stuff. Learn how markets work, learn how our strategy works, learn how to put on and take off trades, put together 10 consecutive days in a row, go live, build your account balance by $2,000, add your second contract, and then follow the blueprint. Okay? And we never on the alerts want to risk more than $300 per contract per trade, less when possible, based on our very simple 3-step methodology, okay, which is based on market structure. We don't use a percentage of the ATR or any other kind of a formula. We look at the structure of the market, and the market will tell you where the stop loss should be. And if it's more than $300 per contract, you go through the other 2 steps, and if it's still more than 300, then we pass. We wait for the next trigger. Most days, you'll see these alerts trigger multiple times. Not only the concierge, but the logic alerts, which we just scroll through that long list of from last night, or for the entire week. Okay? Here you had one trigger, back above the trigger, second trigger. And price reached up, but it didn't quite get high enough to give us a third trigger. Okay, a beautiful 59-point drop at support. Price bounces up to the BBC. Resistance sends us down to support, which sends us back to resistance at the weekly trading zone, back to support at the weekly trading zone. So now the question, will buyers be able to get price above the BBC? If so, then we have a nice little window of opportunity overhead. If buyers fail to do that job, okay, we've got a low, a higher low, a higher low. But if this thing comes undone, then we have a very nice window of opportunity down here. We want to make sure we get below that swing low before we enter short. Now, the next weekly trading zone below is at 32.98/99. It's just so easy. 32.98 slash 32. All right. So if price gets rejected here at the BBC, if we get back below the weekly trading zone, we get below that low, below that low, below that low. Okay, and we've got this little window right here, taking us See, the swing low here is 33.10, so we want to see our entry probably about 33.08. Okay. So from 99 to 08, it's about 9 points there at $50 per point. It's $450 per contract traded. If price overcomes the BBC here, and we're looking, see, price is always trying to get to a weakened zone. It's either trying to get to the zone overhead or the zone below. When price is below the BBC, it's trying to get to the zone below. When it's above, it's trying to get to the weekly, price is always trying to get to the weekly trading zone. The one below, if price is below the BBC, and as you can see here, once it gets above the BBC, then it's the weekly trading zone above. And it looks like it wants to make that move up. We've got, 19 minutes left in the life of this candle. I'd like to see it consolidate a little bit here, and the next candle take us up. This may be the candle that does it. My only concern is the length of this candle so far. The low's 31.25. The high is 41.25. Right. So that little candle right there is already covered 10 points. That is in and of itself almost an extended move. So our entry up here, roughly 33.46 up to 56. So that's a 10-point window of opportunity. And down here, we got about 8-9 points. So either one of these two will trigger. Okay. Either one will be a high probability trade setup. Since I don't know the future, I don't know what's going to happen next, and neither does anyone else, no matter what their website says, because that's not how God created the universe. Buyers will either make their stand, okay, whether we take out this swing high or whether we take out this zone, only the order flow can answer that question. Okay, right there. Now, if we get below this low, we still got to look at this low, and then we still got to look at this low, and that takes us to the window of opportunity. Remember, everything that we do here is based on the trend. When I put an alert, in fact, I put a counter trend notice in the discussion group last night, but I reminded everyone I don't put counter trend alerts in the alert channel because they just don't have the same high probability as a trend trade. When you've got that bigger wind trend at your back, trend wind at your back, the probabilities move greatly in your favor. Okay, it's kind of like swimming with the current as opposed to swimming upstream. So when price is below the BBC, we're looking for lower prices. When price is above that green line, we're looking for higher prices. So really what I'd like to see, going back to my earlier comment, is I'd like to see us get a close right in this area, and then a second candle, close just above the BBC. This is in that perfect world. Close just above the BBC, maybe right where we are now, but we still have 15 minutes. And then the next candle, as it takes off, that'll be a beautiful opportunity. And if it all falls apart, then we've got this opportunity right here. So if you're an S&P trader, your next two trades, potential trades, are all lined out. Now all you have to do is exercise patience and wait for price to deliver you one of these two trade setups. In the meantime, do your nails, wash your hair, walk the dog, make a sandwich. Okay, let's go to the Dow. Last night's alert for the Dow. was to be short. The Concierge alert for the Dow was to be short. 27885. Two 7,885. Sell 2,7,885. Okay. Now, just like on the S&P, you're going to notice this a lot with the indices. We got an initial drop, right? We hit the trigger, boom, the swing low was 27,811. So 85 minus 11, 74. So it's a 74-point move. At $5 a point, it's $370 per contract traded. But then price did, just like it did on the S&P, it got back above the trigger. Down we go again. Okay. It gives us an exit signal right there. Okay. So if you entered at the published entry, 27885, 27885, and you exited at the exit signal, 27700, that's 185 points from the entry to the exit signal. At $5 a point, that's $925 per contract traded. Or 9 weeks. 9 weeks of owning a passport. Pretty soon you get tired of paying $100 a week when you can just get it all cleared up and get it out of the way. But hey, at your leisure, at your pace, as it works for you. We're just thankful and blessed that we'll be able to make that offer, to be able to do that so that more traders can participate. Now, this thing dropped all the way to 27,426. So 885 minus 426, that's 459 points at $5 a point. That's a $2,200 per contract move. But like I said, getting out of the swing low, it's difficult to do. So that exit signal right at this weekly zone, very beneficial. Although that's a previous week zone, so let's get this week's zone up there. Now that's this week. The next one is 27735. Right there. 27735. And then the next one, 27515. As price hits a zone and finds support and goes looking for resistance, you see it found it right at the BBC. Support to resistance, tried to get back to the zone. Buyers came in early, ran it up, took us right back up above the trigger. Okay, and so we had one trigger, we had a second trigger, now we have a third trigger. A little different scenario on this trigger. Okay, because you have blue and climbing below you, that could potentially be support. So could you still sell 885? You could, but you need to be prepared to take your leave, if need be, by 27,810. Okay, so that would make it about a 70-point trade, $350 per contract traded. However, you could have stayed with the trade. Now, when if you're coming down and you're on top of blue and climbing, your finger needs to be on the exit button, because if this thing starts to go in the least way, the other way, you need to be out. This is sort of a rare occurrence here where it just ripped through both of them as if they weren't even there. That happened at the 12 o'clock hour. Now that we've gotten below this zone, below the BBC, we've pulled up, we're pulling up to red and falling. A high probability move from here, okay, is to the downside. But like with the other markets, with the S&P, we've got a low, we've got a higher low, and another higher low. Now, if we start printing a red candle here, keep in mind that if you get short, there's potential support there, and then there's potential support there. And then you've got a weekly trading zone, which is always the potential to be good support or good resistance. Okay? All right. That's the story on the Dow. Russell. Every one of our traders had every one of these opportunities last night. And so don't be shy now. Get in that simulator, get in that demo account, and start putting on and taking off trades. Well, I don't want to mess up. I don't want to get stopped out. No. Just dive in. Get your hands dirty. You're in the simulator. It's designed for you to get beat up and get stopped out. Nobody's watching you. Nobody's judging you. Nobody's grading you on the curve. You have to get familiar enough with the charting platform and the order entry system so that you can start to ask really good questions. Okay, I was trying to go long today at this price on this market, and then this happened, and then I was lost. Oh, okay. We'll walk you right through it. See, there's always somebody standing by in the wings, myself, Michael, Valerie, or one of our many traders who hang out in the discussion group. If you ask a question that they know the answer to, they'll be more than happy to answer it for you. It's just a great group of guys in there. And ladies, on the Russell alert was to be short 1543. Okay, so now this swing low, that was only good for 1.5 points, right? So that's $75 bucks. Most likely you just stayed in that because it was such a flash in the pan. Got back above the trigger, triggered again, down we go. The swing low was, we'll call that 1519. Okay, so 43 minus 19, that's 24 points. The Russell pays $50 a point. 24 times 50 equals $1,200 per contract traded from the entry to the swing low. Now, the swing low didn't quite make it to, oh wait, this week's zone. I haven't adjusted this one yet. The zone that you got Monday morning at 6:15 a.m. Eastern. It's 1516/1517. So we came real close, didn't quite touch it. That happens. Consolidation is the most likely thing that you'll see. Rejection is the second most likely. When price slices through like it's not there, that's the third and least likely thing that you'll see. But from 1542. Well, it was actually 1543. So 1543. Okay. And the first exit signal would have been right here on the close of this. See the step line? It's on the right side of red and falling. Okay. So you're looking for the first green candle that closes above that step line. The closing price was 1535. 1535. So 43 minus 35, that's 8 points at $50 a point. That's $400 per contract traded. Guess we sent you some pretty good alerts last night. Okay, we trigger again over here, and this one, like the other one, okay, you're above the trigger, you trigger, but you've got this zone right below you, but that's good for 3 points, okay, so there's a 3-point move there, but beyond the 3 points that are offered right here, okay, once you get those 3 points, now you got trouble, blue and climbing support. So this was a fine trade to take as long as you did not have unrealistic expectations, as long as you were not trying to take more than 3 points out of the trade, because we knew that at blue and climbing we would find potentially good support. All right, in Q. Last night's alert for the NQ was to be short 11,215. There you get the idea. Sell 11,215. Okay. Now, zones. We've got a zone at 11,480 up here, and then the next zone below that is 11,313. 11,313. Okay, there we got that little consolidation there, right at the zone. Okay, and now below that is 11,109. Okay, again, some consolidation, we take a dip, we come right back to the zone, leg, retrace, leg, retrace, leg. Okay, all right, so the initial alert is to be short 11,215. Now if we just went down to the zone below, 11,215 minus 11108. That's 107 points at $20 a point. That's $2,140 per contract traded. $2,000 trade, one contract. 10 contracts, 20,000. True story. Do the math. Now, we could call this a, did this get back above? What was the swing high? 213. Nope, we didn't quite get back above. So we just had the one trigger there. As price pulled back up to the BBC, we expect that to be good resistance, and it was. It gave us another leg to the downside. Price pulls back up to the BBC and a weekly trading zone. So now that's potentially good resistance times 2, and that gave us another nice leg to the downside. Just this last leg right here from 108 down to 933. So it's about $1,400 per contract traded right here. But the good news is we teach you how to do this. We teach you how to read the chart. We teach you how to use the indicators, how to read them. And everything we do is so simple. I mean, it's right here. Everything's right in front of you. If you're tired of gimmicks, if you're tired of magic shows, if you're tired of somebody blowing smoke up your chimney, and you would just like to learn the truth about trading, if you'd just like to learn how to be able to put on and take off trades, knowing you're not going to, hit a home run every time you step up to the plate, you recognize that being stopped out is as much a part of trading as breathing is a part of life. You've had enough of the other stuff. You just want to learn. You just want to earn. Okay? Is that wrong? Is that being greedy? No. No, not at all. Not at all. Crude oil. Consider being long. 40.55. That's what the alert said. Had you followed set instructions, 40.55. Up to the zone would have been $100. Up to the next zone from 40.55 to 41.20, about $700 per contract traded. Now on the short side, 39.45 was the short side, and the swing low was 39.43. So it tiptoed, two ticks over the line. That happens. That's why you use a hard stop. Always. On gold, last night's alert, be short, 1964. And we find 1964 right here. Okay, 1964. And from 1964, we went first to the zone below, which is $200 per contract traded. In fact, we did it once, it's like we did it twice, it's like we did it 3 times. And then we traded to the zone below, which is actually this week, that zone is 41.42. So from 64 to even 44, that's $2,000 per contract traded. Paid a little more than that. If you wanted to get out at the exit signal was right here. Okay, the closing price of that candle was 1951.40, so we'll call it 1952. So that's $1,200 per contract traded from the entry to the exit signal that printed right on your chart. Okay, so that covers all of the Concierge Trade Alerts from last night. Also, in case you missed it at the beginning of the show, our recap for the week so far, as of 11:45 a.m. this morning, Now, we just went through all the concierge. These are the logic alerts. These are the ones that come out live in real time, round the clock, 24/7, as opportunity presents itself. The ones we just went over, those come out as a static report every night shortly after the Globex open. Okay? Out of 44 alerts, 10 never triggered, waiting on 1, 33 actionable, 3 stopped out, 9% of actionable alerts this week, week 111, have been stopped out. Now, that's not a typical number. The typical number is 20%. That's what we've averaged over the last 111 weeks. And with that, let's go to our good word for the day. Yesterday, talked about the importance of having realistic expectations in all things in life, in trading. And so today, we're going to talk about feelings. Feelings, nothing more than feelings, right? Feelings, they creep in, they mess you up. We get emotional. We got ice water in our veins when we're trading in the simulator. But boy, the second you go to the live account, that ice water in your veins turns to something more like jello or quicksand or something. And in life, you have to make sound decisions in your life using the mind that God gave you, using logic. Feelings are nice, but you can't always trust them. In fact, Jeremiah 17:9 gets pretty serious. It says, the human heart is the most deceitful of all things. We all know well-intentioned people who, when they agree to do something you ask, are unlikely to follow through. You know, do you have that person in your life? Don't be that person, but I'm sure you have that person in your life. As nice as they are, they're unreliable. Your feelings are the same. Much of the time, you can't count on them because they're not attuned to what's best for you. They're more interested in having their own way. For example, our feelings can get us excited about going shopping when we don't have any money to spend. Our feelings can entice us to eat cheesecake when we're trying really hard to avoid extra calories. Our feelings can lead us to stay up late at night working or watching a movie when we know we need to get up early the next day. In short, our feelings are fickle. They change like the wind. And it's amazing how much power we give them in our lives. As believers, we have something wiser and more dependable to rely on than feelings. That's the Word of God. When we feel strongly about something, it's not always easy to determine whether or not we're in agreement with God about it. Jeremiah tells us, the human heart is the most deceitful of all things and desperately wicked. Who really knows it? But I, the Lord, search all hearts and examine secret motives. It's Jeremiah 17:9. And he does it through his word, which is sharper than any two-edged sword, exposing and sifting and analyzing and judging the very thoughts and purposes of the heart. Hebrews 4:12. So here's the score. In life and in trading, if you're truly interested in rising above your feelings, you'll let the Word of God be the determining factor in all of your decisions. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. At the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.